Greetings, market rebels. Welcome to this week's macro measure video combined with the old sector situation. Sticking with the recent format, I'm Wayne, my partner's Ryan. We've got Greg, my son, helping out. For all of you that are regulars, it is about 10 after, I think, 4 here on Friday, August 9th. So let's get the trustee disclaimer flashed and the trustee intellectual property rights notice flashed, and then we can get into things. So, sticking with the format we've been using recently, never sure what we should do exactly, but I'll just take one brief moment here to welcome any newcomers. The goal of our videos, I think, is a little different than a lot of folks out there that put out market videos each week. My goal is really to try to help people make money in the end or lose less, right? Give back less. And so I'm a very firm believer in trying to identify the market environment you're operating within and then to apply what typically works best in that environment. And you're always in evaluation mode or reevaluation mode right from there. So you're always looking to potentially adjust, but as long as the environment and the trend or what have you, the momentum stay in place, right? You continue to just stay disciplined and do the best you can with it. So if you're looking for big predictions, that's probably not, this is probably not the right video for that. And this is probably really not the right week for that. This week did start with a bang, and then it kind of ended with really, I don't know, it kind of ended with a whimper, I guess you could say, because quite frankly, they did a great job of essentially staving off another leg for now, at least, of selling, right? So we shall see. If as always, that's the best part about it. The market, we get to see what we think at one point and then see how that changes and how we track the market psychologically, mentally over time. And as of right now, I would just remind anyone, especially if you're new, set the playback speed to 2x because I do a lot of talking. I try to convey as many things as I can that from my experience that goes back quite a ways at this point to try to help folks out that are newer to trading options and using the charts and so on and within the market to try to navigate all the crazy stuff that comes our way. So last week, the big side note, I call it the side note, but really it was the big note, was that still sticking with sense of very serious times are ahead, all hell could break loose. And we did start to see hell break loose on Monday, but as everyone knows at this point, we saw a nice save again. We saw dip buying kicking in. There were reports that the hedgies decided they were going to load up for a change. I'm always kind of a little worried when the hedgies are on my side, or in other words, I'm in line with the hedgies because they tend to get crunched pretty badly at times, and as do the sort of CTAs and things like that. But it is what it is. I'm slightly bullish in a news neutral world, which doesn't exist. But if it did, I think I'd have a slight bullish bias right now, and I'll show why I think on the charts. Essentially, right, you got almost an unchanged week, which really just I think sometimes is the matrix or the market powers that be just mocking people that react because it's just uncanny how often it happens after there's been big volatility and these guys really create an unchanged going out present for everyone at the end of a week or at the end of a day. That's where we ended up. So all hell started breaking loose and then it was arrested basically. I'd still say that we're in a volatility storm until further notice. We had initially the big down, then up solidly, then down solidly, right? And then up again, really, to finish the week. So the volatility kind of mindset, take what we could get, go for singles and doubles. Don't expect really, as we normally would hope for, sustained momentum to develop for very long. And I think that was really a good way to come into this week and stick with it. I also would say just it is too soon in my book. There are other shoes to drop potentially. That's always the case. And you just don't know until you're beyond it, right? You really can't have confidence it's completely over. A lot of people do jump to conclusions and say, well, look, the VIX spiked to 65 point something and to close at 20. Doesn't that tell you that it's over? It could be. but I've also seen times where I think that spike was got a little ahead of itself. But I've also seen times where people thought it was safe to go back in the water and it wasn't. So it varies. There are some things we'll cover though that I think we'll talk about really starting now, that I still think the year will be on balance pretty volatile. I still think that's going to be the case, certainly on until the election, should we have one, and then through the election period, should we have one. So we'll see. Even the aftermath could be volatile. So that's why I'm saying for the balance of the year. But to cut to the chase, I still think it's too soon for either party to claim complete victory. I think in the short run, the bulls have to be somewhat happy because theoretically they've taken a major part of the unwind trade of the carry trade and somehow managed to turn it into an unchanged week. You have to ask, though, is this really the eye of the volatility storm? And here we go again soon. Now, that would be really news, right? News would start driving that. But Japan did get involved. There's been all different types of coordinated interventions in the past. It wouldn't surprise me. I started noticing, really, I felt like at some points early on, after the wildness settled down a little bit, that we started to see kind of like that what I call the waft algo. It just sort of grabs a hold of things and deadens volatility and just starts walking things back up without really big buying. And I've seen it many times, and I can't say like, oh, I know the exact moment someone just turned that on, or even if it exists, but it just starts to create this feeling that's really just subdued, right? It doesn't really give a lot of people to work with. And people just, it just kind of naturally waft stock prices back up without heavy duty buying. It happens, and so probably a lot of people are dumbfounded and sit on the sidelines, which probably even aids the algo's cause should it exist. But that's seemed to happen this week to me. I feel like they turned that thing on a little bit at some points during the week. And in the end, they kind of ran out the clock, and that was it, right? It was kind of a boring week. UOA Pro, which is my main focus each and every day. Other things I help out with, certainly, and I write the newsletters and I help make other picks along with Ryan and Greg for different things, different services. But my main thing is keeping an eye on UOA Pro to keep that active. And it was definitely an underwhelming week in there because, and I kind of know that coming in. It's not as if I just throw my hands up and just watch cartoons, but basically, when you know that you're inside of something, you're not really busting out to a new range, kind of like new recent price discovery. You end up trapped in these ranges, and you don't get sustained volatility. That has definitely historically never really been the great time to trade UOA, because the UOA tends to be a lot like the way we handle it's a lot like momentum trading, but we believe at times it really puts our eyes on things that we wouldn't have spotted otherwise. And it also puts our eyes on things that tend to outperform in terms of versus just a random momentum pick. So I do think if you follow the UOA names, you get a little bit more bang for your buck in terms of the magnitude of certain moves that you don't always get with just pure momentum trading. So I think those are the advantages. There's a lot of ways to trade it. We trade it in a way that keeps it, we think, very active. A lot of different names, different types of trades that we try to adapt to the current and changing market environment, so that when there's speculative stuff going on in rinky-dink stocks, we try to get involved. When it's all about the megas, we get involved. When people are trading sectors strongly, right, you see across the board sector kind of rotation and sector positioning. We'll try to focus on that if everything looks supportive of that, as many things as possible look supportive of that. So with that being said, are we in the eye of the storm? Right, I think we are, but I can't say that I know what the next problem will be. I do want to add, though, that remember, we are in an election year. The election year bias is up. This is a presidential election year I'm referring to. August, the bias is up in the end. You do have the major convention that's coming up. You've got that as the party that's currently occupying the White House. They're in control of the White House, and they're essentially the incumbents. They want things to look good. Hence, Janet or ergo Janet Yellen and all the liquidity that she's found a way to add to the market. You've got that, and the Fed probably not wanting to see a stock market debacle happen right near a political convention, at least theoretically. That's all supportive of the market. So if you ask me, if I look at the charts at this very moment in time, I look at all those factors that are likely to try to move the market higher or support the market moving higher. That's all there, right? And if you look at the next line, they had a big crush of megas. A lot of these mega caps have gotten rocked when you get down to their lows, but if you look at the deft handling of all this, the spies and Qs were really not annihilated, right? They took a pretty decent pullback, decent hit, but they really are now, I think, ready to do something more, potentially. Now, that's obviously a news neutral assumption. I think there's a slight bias of bullishness, news neutral, and I'm calling it dueling retracements, which will show. So what I think I'm going to do is move this off to the side, and then we'll have the charts in front of us, and I'll go through these. So you may want to take a screenshot or something like that and keep that off on another monitor or something. Pause here, do that. It might help you to go through, because I'm going to cover all these lines, but I'd rather do it with some information in front of me. So let me just briefly pause our share. I'll start winding things down for us so I can keep an eye on that. I'll bring a few things up here, and I'll try to cut to the chase on these things for us when I come back with, hopefully my number 4 monitor will be right there. That does look like it's showing. So I'm going to come back to this because we were just talking about the megas. So let me get those piped into here. Make sure that I'm doing this right. I always tend to have at least one little, there it is, one little typo. Let's get MSFT. Let's do, what else do we have? Nvidia, Tesla. Let's do Netflix for good measure. This should bring up a chart that I put. Yes, it does. It does do that. So here's some of your biggest dogs, right, that have been part of the so-called mega mag 7 or at times, and you can argue over what should be in there, what shouldn't. But the point of this is just that these are all really at what I would call a secondary resistance line. And so this is what happens because I like to look at a lot of different factors. Things get messy quickly, and that's why it's so hard for me to just run kind of like clean charts for everybody and just keep them that way, because that's just not the way I do it. And I just have trained myself not to get caught up looking at a lot of things. I can look through a lot of sort of like noisy charts and find what I need because I'm just used to doing it for so long. But anyway, that's one resistance line I think that may have been in place. And then roughly this first one I drew, but now you're really maybe at another out here. If you connect these two, I've seen sort of parallel lines like this matter before, and I'm not saying they will this time, but I'm just saying you're at this right here on here. And you can see if I sort of pick this up and give us a little bit better of a view on some very simple classical technical analysis indicators, you can see that all of them really are showing that the momentum is swinging up, and it would be hard not to, right, with the major gap down and pretty much the markup, the recovery, the save, whatever you want to call it, the squeeze ever since. So that's what's happening. These things seem primed to me right now with a little push, try to push up towards the 50. Now, this doesn't matter because probably very few people are trading a mini basket of all these names, but I'm just trying to make the point that if these big dogs look primed to go to there, or maybe up here, right towards a higher level, if they're able to do that, then they're going to really recover more of this drop, right? The more of this drop they recover, the better it is for bulls, not just based on the fact that they are recovering more, but just technically speaking, it shows more people that there's still more strength that's coming back into the market, that maybe it gives them more confidence and sort of tilts things a little bit more in the bulls' favor. So I think that this 50% retracement area beyond the secondary resistance line that I drew for these mag 8 at this point. You've got the 20 there in light blue. You've got the golden 50 right there, and you've got the 50% retracement of the whole mess. So that to me seems like a logical area. If you go a little bit higher than the 50, there's a flat line near there, right? Very close to maybe the open on this particular day. I'd put a flat line just about right there. It splits the difference on a lot of different things. And so that open that day of this package is 2,500. So yeah, if they get these things up a little bit more, there's still a little something waiting for them above the 50. They're not out of the woods. A lot of people are going to say, just use this high. And that really wouldn't be a bad comment, right? If you use that high of 25.42, if you want to wait that long. But the point is, right, they're not that far from really doing some good work to potentially blast stuff back up. And what I would say is, right, that you've got to keep your eye on the fact that as a group, these things are primed, right? I think they're right on the edge with a little more push of doing it. And so this is the tried and true game plan that the gang uses, right? When you need to make everything look better, you can go and grab these biggest of the big dogs that were really kind of abandoned by many people because probably margin calls, and everyone tends to own some of these because they had so much momentum and they have been very successful, but they're getting a much better deal to rescue the mag 8 in this case because they're getting better prices right than they were in a month plus. So they're getting reduced prices on stuff that was more expensive, and now they've got it. They've got it there. So there probably are legitimate reasons even to buy as well, not just the normal squeeze sort of inducement, if you will. So with that being the case, let's look at the single most important stock potentially within here, and that would be Nvidia. And this has the EPS looming later this month, right? Remember, they always tend to report later than a lot of the rest. You're getting a lot of the EPS season sort of petering out, right? Not as active as it was. You're through a lot of that. You got the Olympics winding down. You've got the convention coming up. You've got the normal sort of August presidential election bias that I mentioned. And you've also got the fact that this stock in recent times tends to rally to earnings and then rally through earnings. So you tend to get this bias in front of earnings to expect good things and then rally into it and then usually even tack on more. So the question would be with theoretically with the bad news out of the way, I believe that they had some sort of a significant delay in one of their new products that affects some of the biggest of the big dogs dramatically. I think they made that. There was no news that I'd seen about that. If they get this thing rolling back up, that helps a lot of things, especially right semiconductors and probably a lot of the other big dogs maybe potentially key off of this. And if they do that as well, right, they've got really this motivation that they can get lower price. They're getting much lower prices than were recently paid for this, right? If you go back, you're getting something you haven't been able to get since late May right now, right, in terms of buying in on a per share basis. Still, even though it rallied a little bit. And I think it's right. You can see it's really right on the cusp. I think you can see that if I enlarge it, just a little bit more momentum, it ought to start being able to fight its way up a little bit more. So again, it held above this resistance line that I had in place. We could probably revise that a little bit now that we've gotten a little more data to work with. And you could say it's probably right about there, but it's really close. And that's what I mean by sort of being primed or on the edge or on the cusp. It's really close to potentially popping up towards the declining 20 in light blue or the declining 50 there in that golden yellow color. And that's also near, you can see my cursor, that's also near a gap closure. So that is very interesting. And remember that we've seen a couple of things that are interesting. So let me see if I can find what I want to try to do is find the right stuff. And I just did, and I'll come back to the chart. So what I wanted to note is that this is on the slide. that you've got the gang has stuff to work with. That's the first thing we should establish. The gang has, and if you're new, my just from observation for 30 plus years, I mean, take it for what it's worth, but but one of my big things is you got to really keep your eye on what's coming up because the gang tends to work their magic around key economic releases, political developments, Fed stuff, obviously, and so on and so forth. So things they can use are PPI, are because we're in this sort of really tight interest rate, um, environment in terms of tight being like focused upon, right? Where everything matters so much. You get CPI, PPI, and how this can affect rate reductions and the magnitude of those and the speed at which they'll be potentially made. And then you even have a pretty chock full day Thursday and probably still housing being a big deal and consumer sentiment Friday. So there's a lot for the gang to work with in the week coming up. And what I would add now that we're here is that you've got the fear and greed index having registered 17. And so this, I say it every time, but I have to. I don't know if we've got new viewers. This is really probably not an optimal thing to take a look at, but this is what we have at our disposal. This is what everyone has at their disposal. So you can see that this is still pretty low. My point is, right, that you could see where we were in October, and we know that the market bottomed then and they rallied. So I think you're at a level, or you reached a level that allows for a tradable low. Am I calling for that? No, because that's not what I do. I'm just saying, like, if you are still bearish and you think there's more to come and you think this economy is deteriorating, all these things that I would probably agree with, I would say you're probably right about that. But will the market care is the bigger question. How will they act in the short run? Because we're talking about short-term trading, trying to frame the environment we're operating in. And that's what I'm trying to do here. I'm trying to say, like, look, I do still think there's another shoe to drop potentially. I don't know that, though. I can't know that. And I do have to concede that despite my concerns, they have what they need in terms of fear greed index ammo to justify, well, hey, the market got overdone. It became extremely fearful and we jam jobbed it. There's no way around that. Just like with this AAII sentiment survey data, we haven't looked at these tabs in a very long time, but there's times for everything, right? There's a really good birds song about that. So and I think that's based on some Bible verse. I can't recall, but anyway, the point is that we're going back to this because I think it's appropriate at this time. And you can see that the bullish number is really the lowest bullish number we can find since late May, early June, which I'll go back to in a moment. So also notice, right, that your bearish number here is the highest that we can go back and find on out of the last 6 months. So the people that are looking at it like maybe you are and maybe I am, we have maybe too much company, maybe too much company. So you've got to be careful about that because when one side of the boat gets overloaded, the gang seems to work some of their best magic, right? And just go into hyper levitation mode and the rest of it. So you just have to be cognizant. Again, this is why discipline is so important. This is why managing your positions and your triggers so with discipline is so important because things can change and there might be decent reasons. The way a lot of these permabulls see it, they probably think this is a great opportunity. Now, I do think there's complacency that's already crept back into the market because the Loft algo worked really well as it usually does pretty much when they turned it on this week. There were dip buyers. There were hedge funds probably covering some shorts. They might have been right for a change, on balance. So that's what you've got to look out for. But you can see that this is kind of, if I back up just a little bit here, it should give us, where we are. And you can see that the average bearishness right now for the next 6 months is the bearish reading now is much higher than it typically is historically on its average. And you can see that the bullish is actually a little bit higher as well. So it's very interesting because you have the camps that are pretty bipolar, and if you look at the middle here, right, where you got neutrality is really down there, right? It's much, much lower than its average. So what does that tell you? It probably tells you that this is going to flip pretty quickly, right? When they get something going one way or another, it could probably add to the volatility. Well, I should say the momentum, but yeah, volatility too. But you get the idea. So I do think at this time this is worth looking at. Um, and they beat this bullishness down is probably the final note we should make on that. It's probably what as I said, our lowest bullish reading. Now let me go back to this chart, and we'll come back to wrap up with that. But let's just take a look at late. Let's take a look at late May. Okay, and I'm not trying to draw perfect analogous times, but I'm just trying to say if you go look at late May, let's see where if I can enlarge this a little bit for everybody. This is why I just got to do something. I don't know what I've got to do, folks. I've got to do something to get better visuals for everybody. Everybody that remains awake during my videos deserves better visuals. But anyway, look, there's late May. I can't make it much later, right? And early June. And you could see what followed those readings. You could see, right, they pretty much ran the market for a month and a half, 6 weeks of run there. So that's that. I'll go back to Nvidia, and then we'll come back to SPY. So I'm not saying that it will happen. Remember, I'm saying that it can happen, and it wouldn't be a shocker to us just from doing a little bit of homework there if that were to happen. No, I don't think, right, that given what we're talking about, that any of us would be shocked if they did pull that off. They did close a major gap here in Nvidia. They've got this thing going. It typically does rally, and this has been the lead sled dog at times. And I think a lot of you know that. But the SMH really also has taken a real serious beating. I mean, it went from what, 283? What was our low? 200, right? So you lost really nearly, right? That was quite a loss. I mean, you're not talking 30%, but that's quite a beating that this thing took in not very long, right? What are we talking about? Wow, not even a full month in calendar days. So that's really a serious sell-off. You get a pretty swift sell-off like that, over owned. Again, too many people on one side of the boat. You just can't rule out, in my book. They brought it down below the 200 in purple, cleared out the weakest of the weak hands, and then immediately reverse it. And they've got it right back up at the 150 there in rust, right at our secondary resistance line. And I think they're going to try to work this back up into here. And then the 2100 confluence right there, that would be along with this former high and this flat line area that's right near there, really. It just all dovetails at about 239-ish. That's a big level, and to me. And the next one would be the clear 50 because it's so widely followed. Now we could drop fibs on here, but this would be, honestly, if we did everything that I'd like to do, it would take us 10 hours. And I'm not even kidding, because we would do a lot of things, and a lot of things on every single security we look at to get the best view of it. What I'm trying to do is give basically the quick and dirty, simple approach that tends to work pretty well, regardless of all the other fancy things you can do. So in my opinion, anyway, overall, right, not really a great sign that you've got your shorties rolling over this hard. They're going to be encountered on any pop higher. If this thing gets stuck in its tracks, and this applies to almost everything we'll talk about, if it gets stuck in its tracks where news starts to send the market reeling, now the first thing we would expect would be the 200 SMA. Does it hold? If not, do they do a retest of this? Okay, and then it would be, does that hold? Do they put in a higher low? These are things we've got to be ready for. Do they put in a lower low and then reverse it? Just like they took it below the almighty, high profile 200 and reversed it on people. So who were probably capitulating right below the 200. That's why you get such a big dip there. So there you have it. Masterful job by the gang. And by the end of the week, again, they pretty much gave almost everybody an unchanged situation in the spiders. A lot of other things fought their way mostly back, right? You almost completely closed the gap that was left. You only missed, I think, by pennies here in SMH. So this is a pretty big dip in SMH. You just can't be shocked with the Nvidia EPS catalyst, right, in the tendency in recent times of Nvidia to rally into and through the EPS. I don't predict that. I'm just saying at least into would be my guess that they try to start doing that. If they can't do that, that would be very surprising given how discounted the stock is right now, in my opinion. But it has happened. I can't say that I haven't seen it before. It's just that I'd be surprised if it really, Nvidia has really lost its mojo that quickly after this just one dip. I could be wrong. I'm not a fundamental guy. I don't have time to follow all the fundamentals there. But that's definitely would surprise me. And that would almost tell me that something maybe is wrong with the market because the leadership isn't leading or trying to take the lead and re-lead. One thing we should note about that would be right here. This should also pop up, and it does. And I would note, we'll get to the sectors, but what I would note is that XLK and XLC, I might be hard for you to see that. Now, these things have come back. There were nice reflexive kind of, let's get back into them. Meta probably had a good hand in this. We did have some really good paper in there. Hopefully people had at least a good week in Meta because it did deliver some good momentum and that helped XLC. But if you can see this, you don't have a lot of XLK bounce back here, right? You can see discretionary not really coming back with a real roar. I would say a good job by XLC, but still significantly off the highs visually. Okay, so it wasn't as if everything just came roaring back, Serve Pro style, like it never happened, and everything's right near the highs. They still have more work to do. I wouldn't completely rule that out, as I'm saying, but I just wanted to note that a lot of former leaders just didn't get their swagger back. So let's go back to this and wrap up on this. So that's where it is. I don't know why the EPS isn't showing out there. It should be show. Oh, I thought I went back to Nvidia, but obviously the charts look pretty similar. So that's why. There you go. So we've got that in what about 20 days, 19 days. So there you have it. It'll be, it'll take a little while, but they tend to do stuff. And, if you really want to get in there, probably want to get yourself looking at vol before where we are here. It's probably already up. I don't have time to look at all that, but I would have probably thought about, maybe if vol starts coming back in, you might want to position yourself again if you want to do some earnings play. But I have no axe there because I'm not a big earnings speculator. Now let's go back to SPY because I think there's some good points that we can make with SPY. And I think it's becoming, for me, a little bit of a dueling retracement battle. And I know this looks very Fruit Loopsy, so I'm going to try to combat that by doing these things one at a time. So when you see it change to blue, I'm going to leave it blue, hopefully, while we talk about it. So that blue grid, that's this whole second leg from the lows we saw in April all the way back up, right until the top that got put in mid-July. So how much of that retraced? Almost the 78.6 would be, it didn't quite get to 78.6, but that's a very deep retracement, right? The only one really left after that is the 100%, so that you give it all back. So that's not really a great look. So right there, there's a little bit of a bearish sort of little feather in the cap for bears. Well, hey, that was definitely a big retracement. That's not a good sign typically. On the flip side, let's look at this sort of mini grid here in blue. And this is the move back up, right, from the top to the bottom. So we dropped this much. How much are we recovering? Well, so far we've recovered more than 38.2%. Your next one up naturally will be the 50%. And that dovetails very closely with the 38.2 from the one we looked at prior, from the fib grid we looked at prior. So you're getting back up into there. You can see that I've got a bunch of lines pre-drawn to save us time this week. that big white circle is really the major confluence area for me. So I would say, look, if it can get through 50, the 50% retracement, which is about 538, you're only about a percent away from that, really. Then gets through there, your next one up is going to be up in here at 544.31, which is really just under, I think, 1% up from here. And then you've got the 50, which is declining slightly. You've got the blue 20 up there, right, waiting for it. And you've got also former support that I just highlighted in blue, and you also have current resistance that I've got drawn in there. So there's stuff waiting for this market if it does get up 2% more. And it wouldn't really be out of I don't think personally that it would be out of the danger zone entirely. Like, you would certainly feel like, well, it shouldn't break down quickly from here. My gosh, like, it's way away from the 200. It is. I would say that. It just, for me, I'd still say you don't know yet. And probably your next line would be really very close to there as well. No matter what we do, I think this whole sort of 550-ish, just to kind of round it off, this whole sort of 550, 545 to 550 area is big, right? And if it doesn't get through there and you roll over again, you always have to look for, well, maybe it puts in a higher low, and it could. But if that, if they can't get it through there, that's a problem. On the flip side, though, right, what we could say is that they do have a decent chance at it. And the reason I see that as a decent chance is because if you look at this fib retracement of the whole move, right, from the lows that were put in last Oct to these highs, that only retraced to the 38.2, and it didn't even quite get that far, right? So you could see that if I'll make that one blue, so it brings it hopefully to meet your eye better. You could see that that's blue. Our low was just a little bit shy of there. So the fact that it didn't even fall that far is a pretty good sign. Interestingly, I think we mentioned this before, but that also would have given them gap closure here on this sort of hidden little gap that probably is being overlooked a little bit here and there by some folks. But yeah, it's in there. And that gap, if they got down to here, that would take care of that. But you've got to give them credit because they stopped it from even reaching 38.2. So overall, I think the bigger picture up, this is why this is hard right now. The bigger picture uptrend for me is still intact. You can't really say, no, that's completely over yet in my book. On the flip side, this whole secondary leg of the move up really got wrecked pretty badly. However, as of right now, right, they're doing a pretty decent job of reclaiming that on the little mini kind of fib retracement that we put in there. I mean, they're almost already working it back to reclaiming half of it. So I still think that the big area to me is going to be up from 545 to 550. If you get through that, certainly, right, then you could maybe be talking about getting back towards closing the gap here, or even challenging the high, or even making a new all-time high. And at times like this, psychologically, that sounds really silly. This is not about me patting myself on the back, but I remember, I've said this before, shortly after this happened, knowing what the gang likes to do towards the end of the year, knowing what the gang likes to sell in terms of, oh, rates are coming down. They've done it 3 times at least since the hiking cycle. That's why I said I would not rule out new all-time highs after this happened, because I think they were going to try to work with it, and they did. And it just happens to be that's just something I've seen them do before, and so that's why I mentioned it. Not because I had my properties and my investments all bet on it, right? I didn't mean it that way. I just meant that I've seen them do this before. So it's hard when bearishness has been dominating for a while to sort of say, well, come on, how do you get back to all-time highs right now? But these guys are very good at what they do. And if they can get through here and start making, new highs, then you might have, once you get through the election, you might have some election related volatility, assuming we have one. and then you might have some post-election, assuming we have one. But normally they resolve things to the upside. And so I'm not sure if they're going to get what they want. I'm not even sure what they want, but that tends to be their way of handling it, and it bears out more than not. Otherwise, we wouldn't know it's a bias or a tendency, right? So it is what it is. So there's kind of the dueling retracements that I'm talking about in the notes. I talked about them getting a good deal. I talked about Nvidia. They have all the stuff to work with next week. We talked about all that stuff. Let's just go back and get to the CME. And, just to be very clear, we haven't looked at this in a very long time, but this is the end of the year. I'm looking at the last Fed meeting, and the way the market's got it priced between, right, these two combined are the majority percentage. They've got the market down at least 1%, if not more by then, maybe 1.25 to 1.50, roughly speaking. So, there's a nearly 50% chance you're down one, and there's a 25-ish% chance you're down even more. So you've got to keep that in mind. It's balanced against really being down only 3/4 to one full point over here. So that's where you are. And so you've got to keep that in mind. While we're here, let's just address this. I put this in. I've been putting this in now for a very long time. I think we used it a lot last year. We're using it this year. The market, you can see the presidential election year cycle in light blue. These are years without presidential elections. And you can see, right, that we're getting into, we had that sort of little rough stuff that happened here. And now we're coming into AUG. And you could see that we had a rough, this wasn't tracking very well at the end of the month, but they tend to have a decent AUG even during the presidential year. So this was part of the notes. I just wanted to show that since we were there. Okay, so that pretty much, I think, covers all of our notes for the most part. If I have to come to these for any reason, I will, but I don't think we'll have to do that. So let's go back to where we were. And let's go through and make sure we cover all these. So you now have a clue as to why I'm saying that the Fed CME Fed watch is where it is. There was a lot of UOA. I'm not going to show this. I'll just explain it. A lot of UOA in some of your bigger names. I already mentioned Meta. There was Amazon. There was Apple. There were IWM, SPYs. There were others too. I think Nvidia as well. I put some ideas in. This was actually a lighter week because the market wasn't really in a strong pattern, and I think there was the UOA tended to hold back. They mainly went for these big dogs, and if that's where I saw the better looking charts that I already shared, and so those to me look primed. There was UOA, so some players out there are thinking in a similar fashion to the way that I'm explaining things, it seems. And they're, part of what they did is part of the feedback loop that has me kind of with that slightly bullish bias, again, in a news neutral environment. So I have no idea what's coming out over the weekend or on Monday morning. So you have to just couch it that way, because that's, I'm ready to turn on a dime if I have to, in terms of entering or managing my positions. Anyway, that the moves that they were anticipating, I don't think they've yet to fully develop. So we'll see what next week brings. I don't want to be remiss to mention that I still think the world is awash in major issues, as is the U.S. The way that the market handled things is kind of like perfect in a way for the bulls, because they kind of they arrested things. They moved things back up. It was methodical, and it's timely, curiously timely, I would say, but not really surprising because of all the things we've already discussed in this video. So everything worked out to an extent for them. I think the only thing left to do is just kind of complete their plan. But that changed the sentiment in terms of people being concerned. So I think, right, I already think that I see complacency setting back in. I think that's really has to do with the way that the Fed has trained people, Pavlov style, And so a lot of people just think that any major dip is a buy. And I think there's nothing better than to have them get all complacent a little bit more. And if you're going to want a lot of support, if you're going to have another leg lower, nothing better than giving them a little taste of some wins. And then you have another rug pull and they're extra confident because it just worked like clockwork for them. And then you really have them trapped as well. And then you get to really enjoy a more thorough, sustained rug pull. I know that sounds sort of like Dr. Evil type stuff or whatever the case may be, but this is just the psychological part that I've noticed over the years of how they sort of manipulate things. And that's why even if you're an experienced trader, you can really start buying into something. If you're not careful, you buy in too much and then they've got you too. And you don't want that to happen. You really want to just stick with this nimble mindset and we'll take whatever comes our way and do the best we can with it. But we're just not going to let them fool us, right? That's what we're trying to avoid. And they could. So just keep that sort of as a scenario that could play out. I'm not predicting it. I'm just saying that that could certainly be the case. And I do think that I see the complacency back. I see the bravura. It's just the way people are. And that's how you get these excessive periods, I guess, in either direction, because people become get their egos invested so much in it as well. Anyway, usually you don't see a bottom when people get this way, where they just quickly think, oh, it's a buy. And you don't normally see this great bottom that's formed at that point. Normally, it has to be a little more gut wrenching, not so easy. But again, you've got the powers that be and all those factors I mentioned on the top line that are all supportive right now, not just the rest of the year, as far as the eye can see, but probably especially right now with they don't want any kind of a crisis to brew. There's a convention. None of them really want that. The election year tends to do what it tends to do. All that stuff is favoring them supporting this in the short run if they can. So probably for me, it has to still be that kind of off the radar news, or let's say ignored on the radar news, that people just aren't caring about, that's going to knock this off, much like with the VIX, right? We said that it probably would take the VIX something big, and it turned out to be this unwinding of the carry trade that, not a lot of people were focused on, that seemed to spur that on. Let's see. Yeah, so market breadth, we'll just make a note of that. We can show it quickly, but market breadth improved. And as I said, I think the gang tended to accumulate. They just kind of, not really heavily, but I do think there was some buying. And I think they just generally, you could see on a quick look of some of these market breadth indicators that are, they're kind of ugly to look at on this chart, but overall you could just see the trend of the week, right? Like you could see that nearly everything got a little bit better. Not every single thing did, but a lot of it did. And that's just a simple look at it, but it is what it is. And so they've got that going for it. In terms of sectors, let's just flash those again. That's still sort of, the sectors to me are really still reflecting what we're seeing, where there's still, it's unresolved. We just don't know. There was sort of this reflex of comeback in a lot of them. XLV, XLP certainly hung in there. Defensive, not a great sign. XLF though bounced back. You got a little bit more bounce back in industrials here. You got XLE that came back a little bit from the early week spanking. So there was a little bit of that. And certainly I think one of the standouts for bulls was XLC. And I think that had more to do with probably Meta would be the top contributor. There's my guess. But you could see that there were basically, there was an attempt to go in and start buying here, there, in a lot of places. I don't think it was overwhelming though, but I think it definitely, it wasn't a bad thing for bulls. It just wasn't a really great thing for them. So it's sort of, to me, like there's not a lot of signal coming out of the sectors, which is why I'm not spending a lot of time on them this week. I don't think there's a lot of interesting stuff that can help us at this point after reviewing them. I still think that many won't see whatever does come. If something does come, I don't think a lot of people are going to see it. It's going to be another case of surprise. we had a special webinar this week, and because I think there were a lot of people that Mark and John and Pete and a lot of those guys know that we're reaching out, asking them, hey, like what's going on? Where did this come from? I just think they're busy people that don't follow things as much as we tend to. This is what we do, so that's probably what spurred it on. But their sense was a lot of people may have felt that way. So we did the extra webinar to try to help out. And I think a lot of folks that watched the videos, fortunately we knew that there were some things out there we should be concerned about, and we saw the VIX when it was a great chance to buy. So I think that helped us. But yeah, I think a lot of people will go right back to doing what they do, and then if another part of a crisis or some other crisis develops or whatnot, or the war situations escalate, that might catch the market sleeping again quickly, which is surprising, but maybe not in the modern world. It isn't. I don't know. Anyway, there was just that reflexive retracement. I felt it was artificial. That's what I mean by the waft algo. I'm not discounting that there were dip buyers and that there was some real buying here and there and hedge funds bought. I just feel like there were times where it was sort of uncertain and things just kind of the life of the market just got sucked out of it, and they just kind of kept wafting it up on no volume, and usually when you get the no volume, that's I call it the waft algo, because they just manage to move things higher without what I would call really serious buying. So it just kind of wafts higher with not a lot of volatility, and that just has a certain feel and look to it for me. But anyway, that's that. Don't want to belabor any of the other things. I'd still be at DEFCON 1 only because of news. If you look at it technically, we're not at DEFCON 1, right? We're pretty far removed from the recent low. The 150 there in Rust and the SPYs is what you have to look at. I put this support line there just for people to be able to observe. If we fall below there, do you start getting a little concerned? Yeah, I think you do. But you've got to really start cracking below it bigger, or you've got to close below it in a meaningful way to start worrying about it. But for now, that's our aggressively drawn support line there in blue. But you're not in the danger zone because you're away from the low and you're still above support. And it closed above the 100-day there, and it's right below the 10-day right now. So you could see where you are. So it's just the reason I'd keep it DEFCON 1 Esterhaus is really because of the news, which I noted in there. And remember, volatility, I call it a volatility storm, but really, like the academics tend to call it, I think, a volatility cluster. And you tend to get events that were issues that just kind of bunch up in time. They kind of crunch up in time. And that's why people say there's another shoe to drop. So I know there's a lot of people out there that are going to wait for that next shoe. It may come, it may not come. For us, we're just going to trade our best until it comes or it doesn't come, right? That's what we're going to do. And just if you don't feel confident, don't. But one of the keys is not forcing trades. But another thing is you can't be overly defensive and sit out opportunities, right? Because look at Meta. I don't want to just act like I'm pushing, oh, this was a great name in UOA Pro, but just saying that there's standouts at times, and it was a good week. And it kind of ticked me off, to be honest. So I wanted to get an initial hit that they had. Can't remember if it was Monday or Tuesday. I think it might have been Monday. But by the time I tried typing the damn thing up, it was already like $7 away. It just went up so quickly on me. But that's what I mean. Like there was a good opportunity to trade in there, a good move from, look where it moved from all the way to here, right? So that's a really good week. That's probably a large part of the XLC rally that we saw. And so for that reason, there's little nuggets of opportunity out there that you can catch. If you look at this chart, I mean, this is just an area that, to me, this looks ready to go. And that's been an important area for the market since the October lows with all the rallying that we saw. So I think you probably want to keep an eye on this. I'm not saying that the ETF is a great trader, but I would drill down into there and look at some charts of some names in there. I would do that if I had more time, but I don't. The singles and doubles mentality, if you're new to Market Rebellion, or if you're new to my videos and my sort of silly little phrases that I use or whatever you want to call them. That's just obviously a baseball analogy, and it just means that you're not really trying to go for the home runs, right? Until we get beyond certain key points, you've got to take what you can get when the market is very indecisive and volatile. That's all I'm really saying. And you could still have success doing that. And I did get some reports from folks that said I took that mindset in and it did lead to success for me. It's just because you just can't always get the sustained stuff. And it is what it is. Now, if you're a sort of like a swing trader towards sort of a position trader that holds longer, it's a different story. I'm talking about people that are short-term swing, hours to a few days to when the market's really rocking and rolling, maybe a few weeks. But when the market's sort of tough, like it's been for the last month plus, you're probably better off sticking with singles and doubles because they don't really let the market go down so easily in a straight line. And when they do, there's a lot of gaps like we saw here, right? That just sort of already give you a really good score. So my key levels right now would have to be breaking this support line. When that does that, I don't know. There's probably a flat line near there as well. I'm going to say, just to give everybody a number, I would say, look, if it gets below 527, then you could start to get concerned about it. Your breakout level is probably, like I said, all the way up here. So the really, not that you couldn't catch a good push to there, you could, but probably to really feel like the market starts screaming, you'd want to see it get through 550. The only problem would be if it screams all the way to 550, it probably gets closer to over. In the short term, lesser charts, you probably get overbought readings. You might have to observe that and then get ready to go. But like I said, all the momentum is swinging that way as of right now. So you've, again, news neutral. I think they tried to push this thing higher. So yeah, you've just got to wait till the storm passes until you can, and key levels are unlocked to really get the bigger momentum coming back. If we do see a strong squeeze higher and the VIX plummets to the low teens or near the 5-year low, which was below 12 that we saw a little while ago, and I'll bring that up. But if you do get that, then I wouldn't blow your second chance. If you missed getting in on all the stuff we talked about, if you get a real jam job here in this market and they smash this thing down towards, right, 11-ish, like we saw back below 12 over back in here. If you get that, or even recently, right, it was right near 12, just in, a month ago. That's when we were talking about this. That's your time for your downside put butterflies, potentially, when you see a rollover and when you see that sort of final phase, you think, in the market, or just positioning yourself. And these are just things you can do that you could even be a VIX call buyer maybe at some point. I think some people still like to trade. It's not that easy to do, but you can. We did see more VIX call buying this week, as a matter of fact. But what I would say is that's where you've got to talk to Ryan or Greg and have them go through that with you in one of the webinars that we have, because they'll do a good job. And just say, and Wayne said, you would give us at least a quick rundown. Obviously, Bill, Stu, Scott, if you're with them, you can get a deeper rundown because that's more, that environment of one-to-one is more suitable, or just some of Bill's Q&A classes when it's not about actual market information, market opportunities at the moment. It's more about pure education. But those things are great to do, especially, I think, just because the volatility is going to be there for the balance of the year. I think you'd have a great second chance. And I've taken advantage of second chances before that way. So yeah, but I did note, I would only do that if we do get a squeeze that knocks the VIX down. And I'm leaving many other signs, many problems really off the table. I'm not going to talk about. I see no reason to go into all that right now. This is already a pretty long video, but all that stuff's out there. My dream someday is to, if I'm still doing this stuff, is to really have a super thorough report, sort of compartmentalize it, where we cover fundamentals and we cover economic fundamentals and things like that. And then you do separate videos, and hopefully that would help people out to just sort of focus on what they wanted to or needed to. And for people that are gluttons for punishment, they could focus on all of it. But I think that's really what it takes to be really prepared. And the only thing I would say though is it's a little bit sort of in a way, at times it feels unnecessary because really, especially me, I would tell you to just look at the charts and work with the charts and the price action and the momentum and look at how the market's behaving and things like that, because that is the stuff that will lie to you the least, which is scary because that's not always easy. But if you just look at the charts and get pretty good at looking through a consistent window that you've built for yourself every day, and you look through that window and you enhance that window with different techniques, and you just simply get better at it, and you note certain things, you can really improve in chart reading, I think, fairly quickly, especially if somebody helps you out and sets you up with a good window, explains to you how to use that window you're looking through the right way. But if you do that, like I said, that's the stuff for me in my career that lied to me the least, right? Just looking at what's happening and just trying to be one with it, right? Trying to go along with it and embrace what's happening rather than fight against it or try to outthink it or outsmart it. And it's hard to do sometimes because you've got to leave all that sort of econ stuff and geopol stuff and uh, valuation levels and so on and so forth. This guy's opinion, that girl's opinion, all that stuff, sort of leave it off to the side and just focus on these charts and just go with them and do smart things. Know your options theory, know your application, become good at it. You get really good at applying it. It becomes second nature after you do it for a while. You know what you like, what makes you feel comfortable. You work with those strategies and actually those particular varieties or forms of certain strategies. Everyone even has their bias of how to do things inside of a strategy. So, in other words, my diagonal might not look like your diagonal and things like that. But you do all that stuff and you're really, then you've got yourself a more than fair chance. You've got, I think, a lot in your favor. But that's why I spend the time on it. But it sort of sounds weird. Why would you want to know all this other stuff if you don't use it? It's because you don't want to get caught off guard. This is all just the way I look at it. This is not a book I read. This isn't anything you should take without qualifying it for yourself. I'm just saying this is how I look at it. I'm sharing that because I know maybe there's some newer people that join each week. I know some folks have been trying to help me out online to get some more folks to check out the video to try to wrap themselves into what we do and how we do it and how it's more of a preparation situation, discussion, not necessarily projections. I know a lot of projection techniques. I use them myself, but right, what I'm trying to do is if I'm trading short term, I can't really rely on them as much. I've got to stick and move more frequently than a lot of these projections will allow. So that's what I'm trying to do. I'm trying to get that good, consistent window to view things through and make my decisions based upon it. And this is the stuff that really turned the tide for me way back when, where I really went from, well, I don't have a really good consistent basis on which to make my decisions about things, and it's really the way that the options markets were maturing. It became very obvious to me that if you didn't get the direction right, you could get yourself in big trouble. If you did get the direction right, you could really do much better. You could do very well for yourself. And so, because a lot of things became directionally dependent within the options markets. And so that's why I became so focused on it initially. But yeah, I think it really will help you. I do try to share what I've learned, mistakes I've made, things like that to everyone. And that's really where I guess I'll leave things off at, because I get that I just got the sense that we might have some newer people coming. And so thanks to everyone that tries to get the word out online. We appreciate it. We do really try to help people. We are there's other goals we have that hopefully will be met in terms of helping people out in the market. I think it's I like to think of things that are win-win for everybody, that are all positive, and try to do those. And this has been my main thing in the business world, or career-wise, however you want to state that. But I do hope that everything we cover has some benefit at some point in time for you. I hope that you get something out of this video that can help you out this week or some week in the future. I always want to thank everyone for supporting us and for tuning into our weekend videos. And it varies, as a lot of you longtime watchers know, it varies from week to week. But for now, I'm not going deep into sectors because I think it's really become a big macro situation. There's not a lot out there, and we'll just have to wait and just see how things unfold. But cutting to the chase again, no news over the weekend that's bad. I have a bullish bias coming in, slightly bullish bias. I think they try to push a little more upside. We got to see how far they can get it if that happens. If there is bad news, right, then you could, all bets are off that way, and you're looking at possible retests, higher low, lower low. That's a fake out. So be ready for all that. So on that note, everyone have a great weekend, and thanks again for tuning in. And everyone take care. Talk to you all through the webinars and see you all through the updates, et cetera, next week.